So Bitcoin has crashed 16% over the last 4 days and altcoins have been absolutely smashed. So if you're new to crypto, you're probably feeling like it's time to give up and it's all over. However, in this video, I'm going to be going over why this price action is perfectly normal cycle behavior and why this crash presents some fantastic buying opportunities. So let's start by talking about the halving then, one of the key components of a typical Bitcoin cycle. So what we're going to do is take a look at the price of Bitcoin at the halving and then the following year's peak. So as we've got here, the first halving, 28th November 2012, price at the time of halving, $13 for an entire Bitcoin, can you believe? And then the following year's peak, $1,152. So if you think about that in percentage terms, that is an astronomical gain from the price of halving to the following year's peak. Halving number two, 16th July 2016, price at the time of halving, $664. Following year's peak, 17,760. So again, huge percentage increase on that. And then the third halving, 11th of May 2020, price at the time of halving, $9,734. Following year's peak, 67,549. So not as astronomical in terms of percentage terms, but still a massive increase, pretty much a 7x on your money. So as you can see, a huge increase in price a year following the time of the halving. Now, if we go back to the charts, we know that the 2024 halving was back in April. So still a long time to go before we are a year from that. So obviously, you know, anything can happen, not financial advice. Markets are completely unpredictable. However, if Bitcoin continues to go in the same patterns, set the same patterns that it has over the past three halvings, a really good time to be in position is around just after the halving, and then a year post the halving, you should be in some very good profits. But as I say, not financial advice, anything could happen. Let's also take a look at what's happened right after the halving on each occasion. So if we go back to the 2016 halving, let's say that was around July, or I need to go much further back, that's 2020. So 2016, here we are, all the way down here, look, in the hundreds of dollars. So 16th of July, I think it was, or July 2016, you can see this was around the halving, and we had this decline here for the next few weeks following the halving, which was about an 18% pullback, so pretty ugly. In terms of the 2020 halving, which was in May, where are we? That's Jan, Feb, March, just here. So again, pretty sideways, not too much of a decline. You could say we had this little pullback here, which wasn't too bad. It's only about 11-12%, but a lot of boring sideways price action before we finally took off in about July time. So about 2 months of sideways before finally some upside in July. And even then we had a pullback there as well. So as we know, we're only about a month or two out of post halving. So still a little bit of time to go before we might see that second leg up. The other thing we got to consider, if we take a look at what happened in the previous cycles, if you weren't around in the previous cycle or any cycles before that, we've often have 30% pullbacks in bull markets. So if we take a look at what happened in January 2021, so obviously it had this huge run up from the halving, and then we got to about 42k and we pulled back 30% on the button down to 29k. We also had a pullback up here in Feb 2021 at about 58k, dropping it down to 43k. Again, that's a 26% pullback. A few weeks later, we had another deep pullback from 61k down to 50k. That was 20%. We also had this pullback from 64k down to 47k, which is 27%. And if we delete all of those, we've also got the big one, which caught a lot of people out, which was from 55k all the way down to 30k, which was a 50% pullback, which was pretty brutal. So 20 to 30% pullbacks do happen in bull markets on Bitcoin. And of course, we had that big 50% one as well. So if we just take a look at where we are at the moment from current all-time highs down to that wick that we made today, that's a 27% pullback. A full 30% pullback would line up quite nicely with this 618 Fibonacci pullback area and also this big weekly level of 52k. And actually, if you extend that 52k level out, that has actually been pretty big support and resistance ever since we got up here back in 2021. So big level of potential support for a bounce. And as you can see, we're actually already pulling up quite a bit today. Let's go down to the daily time frame and take a look. So as you can see, as we've been talking about over the past few weeks, we've been stuck in this daily range for Bitcoin at around between 60k and 73k, bouncing around ever since February. But we finally broke out of the range. As you can see, broke below the daily range low, which I was talking about on Monday. Didn't want to see that, otherwise we could see much further downside, and that's what we've got. As well, if you look at 52k, it lines up quite nicely with this area of consolidation on the daily time frame as well. So anywhere between sort of 50k and 52k, that is going to be a nice area for a bounce, I think. If we then take a look at Ethereum, let's go to the weekly time frame. So in the past week or so, I've been talking about how I thought this was a potential higher low forming on the Ethereum weekly time frame, where bouncing off the moving average 21, I thought we were putting in a higher low from the lows that we had formed down here at sort of 2800, 2900. Thought this was going to be a higher low and we're going to start trending. However, as you can see, not the case, and we are now testing these levels down here at 20k. A bounce so far. We'll have to see whether it holds. If it doesn't, then we're probably going to see 2500, which is a huge level of previous resistance and support, as you can see. If we go down to the daily on Ethereum, again, we've got a nice bit of confluence on this daily level of support at about 2900. You can see lots of price action in and around here, big area of support, and it also lines up with these wicks on the weekly time frame as well. So would not be surprised to see a little bit of a bounce, but obviously what we need to see in terms of reversal, we need to see this weekly level of $3,060 hold or get reclaimed in the following week or so. Same with BTC. What we need to see is we need to see 52k hold. Otherwise, we're going to go much lower. In terms of a reversal, what you really want to see is this level of, what is this, 57k. We want to see that reclaimed, and then we can start talking about trying to reclaim the range at 60k. However, I think it's going to take a while. I don't think we're going to get a V-shaped recovery out of this. I think we're going to find a bottom, obviously, then we're going to range for a month or so, and then we might start looking at a leg up. We might obviously get some bounces along the way, but I think for a sustained leg up, an actual rally, we're probably looking towards the end of the summer, August, September time. But of course, markets are completely unpredictable. That's just my opinion. We'll just have to track how things go over the coming weeks and months. We just take a quick look at ETH BTC and Bitcoin dominance. Not too much to shout about. I was talking about ETH BTC starting to trend up over the last few weeks. However, as you can see, it now looks just more like sideways chop. So nothing to really get excited about. And of course, altcoins have lost all their strength relative to Bitcoin that they had sort of started to build up over the last week or so, where we had this drop on Bitcoin last week, where Bitcoin dropped to 58k. Altcoins didn't really follow, and then we started to base out, and I thought altcoins were then going to start having a relative strength bounce. Didn't happen. They have collapsed along with BTC this week. So it is what it is. In terms of Bitcoin dominance, still going strong, as you can see on the weekly time frame. Until we lose this moving average 21, then of course the trend is going to continue. And a quick look at total 2, one big red flag that I don't like the look of. So for quite a while I've been talking about the total 2 looking pretty good, trending up, which it has been until obviously, well, pretty much this week. Even last week we were still holding, the last 2 weeks we were holding the moving average 21, which was fine. And I've talked about the importance of holding 940 billion. I think this is a big level of support in terms of the index, and of course, as I always say, it is an index, so take it at TA with a pinch of salt. It's not an actual asset, but still you can see how well this level has been respected in the past as both support and resistance. So a weekly candle close below this I don't think is a very good sign for altcoins. You can see even here back in April it was big support and we held it, bounced off it a number of times. So would not like to see a weekly close below this, but if it does, then looks like it's definitely risk off for a while. Maybe we come down to about 780 billion, this sort of consolidation area here, and then you can start looking at risk on for longs again. In terms of opportunities, let's take a look at some altcoins, because even though, as I say, it's pretty risk off at the moment, and we're going to have to, I would personally be waiting for Bitcoin and Ethereum to find a base and start ranging along support before looking at taking risk on for longs. But in terms of dollar cost averaging and spot investing, Of course, not financial advice, but we are entering some very nice levels in terms of higher time frame supports. And not only that, but in terms of, if you take a look at the total discount that we've got from the local highs on these altcoins. So ADA managed to hit 81 cents back in March. It is now down 60% from that point. So that is a huge discount. So if you're getting FOMO about ADA, or maybe you made some late buys up here, you can got the opportunity now to dollar cost average, and you've basically got like a second chance at a lot of these altcoins that you, as I say, maybe were FOMOing into in the past, or maybe made some bad buys that are a little bit too high. You now get the opportunity to bring those dollar cost average down, or as I say, you could potentially start to look at some very, very low leverage or spot trades. So taking a look at ADA here, we have tagged the weekly mid-range on this weekly range, as you see, 33 cents, and a very decent level of support and resistance in the past as well. You can see multiple times this has been used as an area of either support or resistance, and big reactions off it multiple times. So a pretty decent area. You can see we've already bounced off it a little bit already. And as I say, in terms of opportunity, say if this were to be the bottom, not saying it is, probably unlikely, but if this were to be the bottom, a rally just back up to the local highs that we saw back in March is a 130% gain, let alone if you zoom out and if we were to go higher, say we would get back up to this peak of $1.24, you're looking at a return of 250%. So as I say, a nice second chance for people who maybe were late to the game or bought a little bit high, etc. Let's take a look at AVAX. So I talked about AVAX potentially deviating back into the range, getting a weekly close back above $29 and that being bullish. However, as you can see, held as resistance and we dropped, and we've now come down to this big level of support here at $21. You can see this has been a big level of support and resistance all the way through AVAX's price history. Look at all the taps of support and resistance that it's had in the past, and we are now here again. So as I say, pretty decent area for a bounce. Let's take a look in terms of what it is from the peak back in March. We're again looking at 60% down from the peak in March. So if this were to be the bottom, once again, not saying it is, but a return back to those peaks from March is 170%, give or take, which is a really nice return. And again, if we go a little bit higher, maybe we get to this peak of $100 or so, you are looking at, well, pretty much 4 extra money, isn't it? 325%, not too bad at all. Doge, again, another one on a big level of support and resistance that you can see here. Ever since, what's this level been formed? Since about November 2022, you can see big resistance, finally broke through here in February, and now we're coming back to retest as support. So an important level here on Doge, again, could be a nice area for a bounce. In terms of the discount you're getting from the peaks we had back in March, you're looking at 56%, and a return back to those highs from here, if this level were to hold, you are looking at a return of 130%. Again, say we go higher, what if we make it back up to these highs of 28 cents? You'd then be looking at a potential return of 180%. Link, retesting these weekly range lows at $12 that we have held ever since we broke into the range back in November 2023. So you can see the number of times this level has held as support over the following months, or over the previous few months. So again, in terms of a discount, not as much, I don't think, on Link compared to others. Only a 47% discount from the highs we had back in March, but still pretty good. And again, if these weekly range lows were to hold and this did end up being the bottom, a return back to that is about a modest 85%, which isn't too bad. But if we take a look at some higher highs, what if we get back up to this level of big resistance here at $33? You're looking at a potential return of 170%. And then finally, VeChain, come down to this next level of weekly support. Again, big level. If we take a look, it was resistance back here in May 2023 and also in June and July, then flipped to support in November, December 2023, and now we're back here again. Nice bounce so far. And again, not saying it is the bottom, but if it were to be, a pretty decent return back to the highs in March. In fact, let's just take a look at the discount from March down to today, again 60%. And so if we were to return from there from these prices, you're looking at 140%. And again, if we just take a look at what the next peak would be at about 8.2 cents, from here back up to there, 262% return. So once again, just to make sure, not financial advice, not saying this is the bottom at all, just saying that there are some fantastic buying opportunities here, down here to dollar cost average, and maybe even start building a position if you haven't already. But don't be scared. Bitcoin, nice discount, coming into a big area of support of 52k, the 618, and a 30% decline is perfectly normal in a Bitcoin cycle. As we were saying, learning crypto, don't be all in, don't be all out. Always have some dry powder ready to buy and take advantage of opportunities. But as we've just seen, when we take a look back at the data, again, not a guarantee, not financial advice, but usually a year post the halving, Bitcoin is significantly higher in price than it is at the time of halving. So we'll see if that plays out again. Hope you have a good weekend. Touch some grass. Maybe don't look at the charts for a little while. And we'll be back on Monday with another video.